So the government has reaffirmed its plans to make the changes to what's called the off-payroll working rules, IR35. These are going to be coming into effect for the private sector in April 2020, something that they've already done for the public sector back in 2017. This will have an effect on many contractors and some freelancers, those who are operating through what's called a personal services company, i.e. your own limited company. What this video is all about is to explain the new rules, what it's all about, and what contractors and freelancers could be doing in order to mitigate the risks before and during the changes that will come into force. So the off-payroll working rules was already brought in for the public sector in April 2017. So it's been around for a few years already in the public sector. What's now happening is that the government and HMRC are rolling this out for the private sector. So that's the largest sector in the economy at the moment. And a lot of contractors and freelancers operating in the private sector are now going to feel the impact of the off-payroll working rules. Now, let me just explain the first and most pertinent change of these rules in comparison to sort of the current IR35 rules. And that is that the onus of determining the IR35 status per contract now lays with the client or the agency. So again, the onus of determining the IR35 status lies with the agency or with the end client. That's a big change from what it used to be. Previously, what used to happen under IR35 rules is that the responsibility of determining IR35 status per contract lay with the contractor or the personal services company director shareholder. And by doing that, a lot of contractors and freelancers would quite simply get a IR35 friendly contract written up, regardless of how they were operating substance. So the legal form was right, and therefore the determination to be made outside of IR35 was pretty much straightforward. In the majority of cases, most self-determining contractors were going outside IR35, and very few were actually being challenged by HMRC. Now, with this shift of onus, the end client now has that responsibility, and there are also consequences of actually not getting that determination correct. Now, the determination is going to come down to some checklists. There's some tools that HMRC have provided in terms of, how you can determine the status of IR35, and that's ultimately what the end client will be following in terms of those rules and the guidance. But if they do get it wrong and it is challenged by HMRC, then the consequence of that is that the liability for tax and national insurance, the additional liability for tax and national insurance as a result, then lays with the end client or the agency. So there's quite a consequence. Now, a key thing to note is that the new legislation only applies to medium and large organisations. It doesn't apply to small organisations. So if you're a contractor, freelancer working for a small organisation, then actually you've got nothing to worry about, in the sense that the current IR35 rules will be the status quo. That means the determination of the IR35 status still will sit with you, the contractor, freelancer, and your personal services limited company. But let's be realistic, the majority of contractors and freelancers of you out there are working for medium and large size organisations. And with that, the first rule, or the first change, shall we say, is the pertinent one and the one that will impact you the most. So part of the new process that's being proposed is that the end client need to provide what's called an SDS. So that's a status determination statement. Now, this needs to be provided in writing to the PSC limited company, i.e. yourself, the contractor, freelancer, and your limited company. And the whole idea behind the SDS is that the administration now of IR35 is firmly placed with either the agency, who, if they are a free payer, or the end client. And it's up to them to make that status determination. Another change is that the draft legislation is proposing to withdraw the 5% administration allowance. So what does that actually mean? So previously, inside IR35 rules, if you were inside IR35, you can actually claim 5% administration allowance for administering the IR35 rules. It's like an expense allowance. They're even now withdrawing that. So let's say, for example, you earn £100,000, basic maths here. 5% of that would have allowed you £5,000 offsettable against income before tax is deducted. So these are legitimate expenses that were allowed. That's now been taken away in terms of the draft proposal legislation. And the government have also released and launched CEST, which is the contract employment status tool. So this is a tool that's available out there to end clients, agencies, and yourselves, contractors and freelancers running through your own limited company. And the whole idea is that you can go on there and you can do a snapshot, you can do an assessment of your IR35 status for a particular contract. Now, that tool exists at the moment. You can go on Google, you can find it. There's been a lot of criticism about that tool, that it's not robust, it's not fit for purpose. A lot of sort of pushback from HMRC saying that, no, we built this tool and it's robust. And in my personal opinion, I think it's a tool that needs a lot more work before actually it's fit for purpose. So let me just remind you that the current legislation that's been proposed is still in draft format as of today's date. And today's date, we're in July 2019 as I'm speaking to you here, so it is still in draft format. It hasn't been enacted yet, but the aim is that it's going to be enacted in the Finance Bill 2019-20, which will happen in the last quarter of the year, around about October 2019. So there'll be an announcement. I'm going to do another video on that once it is enacted to give you more sort of insight into the final legislation. So for many of you contractors and freelancers, I think the key thing now is to start thinking about what impact this could potentially have on you. And the first thing I would recommend doing is start to sort of increase your knowledge about the new IR35 legislation. Now, it's not final legislation at the moment. I do re-emphasize it's in draft as we currently stand as of today's date, and I'm speaking to you here now as of July 2019. However, in my personal view, and for many kind of industry commentators out there, there is a very, very high, I'm talking 95% plus likelihood it will be enacted in Parliament and it will become a final bill come the last quarter of 2019. So it's best to start thinking about it now, having those conversations. Have a conversation with your accountant, with your accountant service provider, perhaps even your HR department if you are a contractor there. Have a chat with them, see what they're doing, especially if you're in a medium or large organization. You know, are they taking on people to sort of, you know, help administer this? What are their plans? What I'm going to be doing is another video very shortly after this, which will start to sort of help contractors think about, okay, what kind of changes they can make to their behavior, to the way they work, to the substance of how they work, in order for them to mitigate the risk of falling inside IR35 for a particular contractor. And the way that will be done is for contractors to start thinking like freelancers do. Freelancers are as such, where they have more control over what they do, more multiple clients and the right of substitution. So moving away from the sort of one client, one organization, you know, one contract way of working into another way of working. However, in saying that, again, I do re-emphasize the key thing here is don't let the tax tail wag the commercial dog. Because at the end of the day, you don't want to be putting yourself or talking yourself out of work just because you've got to pay more tax. And in many cases, from what the experience was in the public sector, a lot of you contractors will probably go out there and negotiate a pay rise anyway, or a contract rate rise. And by doing that, it will help absorb, if not mitigate, some of the higher taxes. That's just the way the economics works. So there are various other things to consider in that respect. So stay tuned. I hope this little bite-sized video has been quite useful. If you have any comments, please comment below. Obviously, like and subscribe. And please watch out for some more follow-on videos with regards to IR35.